I noticed last week that the Vanguard FTSE ETF had the biggest inflows since June 2017. What I want to get a sense from you, do you join the fray in terms of these kind of flows? We've put it into the GTV library. Are you part of this flow and this momentum of picking up more Europe? Have a look at the GTV chart.
It's obviously an impressive chart whenever you see something standing out like this. But for me, the main question always is are these kind of statistics, is this kind of data something that tells us something about performance going forward? Is this a good lead indicator of what performance is going to do? And unfortunately, we find that these kind of statistics about positioning and flows have very little predictive power. And so therefore, that's not something that we focus on. What I would rather say is that the growth momentum in Europe has been very bad since the beginning of 2018, and we're now seeing signs of this picking up. So the domestic drivers of the cycle, that's the inventory cycle, that's the credit cycle, they are improving. The main drag that we had over the last couple of months was a weak global growth backdrop, especially in the US. And we think in the US the growth momentum has now troughed, which means you're losing the last headwind for growth momentum in Europe. But then we come back to the question that we just discussed with Nera, namely what is priced in already. And so our conclusion is the equity market has run a little bit too far on this trade optimism. You're around 5% too high. You should have around 10% upside by the third quarter of next year. So yes, we're still positive. But crucially, for those who think now it's finally Europe's time to shine, we think, unfortunately, that Europe will still underperform the global market next year for two reasons. A, Manu, as you were saying, we think the uptick in the global growth cycle is only going to be mild. And Europe, with its high operational leverage, but its structural growth weakness, it needs a strong upturn typically to outperform. We think that will not be the case. Plus, we think the euro will strengthen, which is obviously a headwind for European earnings.
Right, yeah.
So upside for the market, but still underperformance.
That's so interesting. And you actually anticipated my next question, which was going to be about underperformance, because it's interesting. A lot of sell-side notes have come out from yourself, also from Goldman Sachs, from Barclays, from JP Morgan, being positive on European equities in 2020. In the meantime, you've still got some caution among asset managers, as they have been actually for a lot of 2019. So in terms of that underperformance for Europe in 2020, do you think that might actually bring more money off the sidelines into Europe on a valuation basis? What could actually tip the balance to mean that Europe doesn't underperform?
Yeah, so there are effectively two things that could happen from our perspective. The first one is we had three powerful reaccelerations in the global cycle since the global financial crisis in 2008, 2012 and 2016. If you get a similar magnitude of the upswing, then Europe, which is very cyclical, it has got high operational leverage, which means it always benefits disproportionately when you've got an acceleration. If you get a powerful global acceleration, which is not a base case, that would be very helpful. The second factor that could help, if you got a lot of euro weakness that was not driven by economic weakness. So let's say dramatic additional monetary easing as we've seen in 2015, and we've seen how the euro dropped, how Europe suddenly was outperforming. But given the little firepower the ECB has left, that's not really on the cards.